Welcome to our training on drawdown capital. This is a topic that is crucial to your understanding of how and when an investor's capital in a private equity fund is actually invested. This video will help you to understand the basics of what drawdown capital is and when it is used. A drawdown capital, also known as a capital call, can be defined as a time when a venture capital firm has decided where it would like to invest, and it approaches its investors in order to draw down the money. The drawdown capital will already have been pledged to the fund, but this is an actual act of transferring the money so that it reaches the investment target. The private equity fund manager, usually a general partner in a partnership, will be the one requesting that investors in the fund, limited partners, provide additional capital. Usually a limited partner will agree to a maximum drawdown capital amount, and the general partner will make a series of capital calls over time to the limited partner as opportunities arise to finance startups and buyouts. A capital call, also known as a drawdown or capital commitment, is a legal right of an investment firm or an insurance firm to demand a portion of the money promised to it by an investor. When a private equity firm is ready to buy an asset, they call on their investors to transfer a portion of the promised money committed to a certain fund. The capital call, or drawdown, notice contains sensitive information, such as a dollar amount to be transferred into the fund, bank routing information, and the investor's name and address. For example, when an investor buys into real estate, that fund's managers may wait some time before using the investor's money to buy real estate, either because they are waiting for real estate prices to be favorable, or because they are reaching new deals. When they are ready to actually buy real estate, the fund managers issue a capital call, requiring investors who have committed money to the fund to actually transfer that money over. The fund might also borrow funds instead of using the investor's money. This allows the fund to benefit from leverage. The financing of real estate purchase is realized through borrowing from banks. When the fund has reached a certain level of return, capital calls are issued and borrowing is paid off. Capital commitment is when the private equity or private real estate funds managers seek capital from a number of institutional and/or high net worth individual investors through capital commitments, which can be fairly large investments. A private equity or private real estate fund is generally a closed-end fund, which means that after one or more fundraising stages, called closings, new investors are not accepted. A fund will not launch if it does not receive a minimum level of capital commitments. For the most part, private equity and private real estate funds are need-based investments. This means that partners of the fund will commit to giving the fund manager installments of capital up to a predetermined dollar amount on an as-needed basis. As investment opportunities are identified, the fund's managers will send investors a formal notice to submit the money they have committed to the program. This formal notice is referred to as capital call and is a contractual obligation that each partner must satisfy. A private equity or private real estate fund's offering documents typically provide a number of potential actions against investors who fail to meet capital calls. For example, a fund may require defaulting investors to forfeit entire ownership interest in the fund and offer the other fund investors the ability to purchase a forfeited interest. One thing to note is that private equity funds impose significant penalties on limited partners who fail to reach their committed drawdown capital amount, and therefore, the status of the capital commitment for each fund must be determined quickly. Thank you once again for your time and attention, and this is BusinessTraining.com, where you can earn a master's level qualification to make more money.